Hey, folks, welcome again back to Soaring Profits. As always, your host, Patrick, and my partner in crime,
James, over here.
Right. And one of the questions that we had kind of come up in our conversations with some of our profiteers was how to trade throughout the day. And one of the stocks that one of our followers and viewers came up with was whether to buy Salesforce. So Salesforce is a customer relation software. And what it is it's a CRM software. So it's a management software for customers, right? And what we're finding right now is that we are ending up in a recessionary time with a bloody market. Everything's hitting the tank right now. And this follower was asking, is it a good time to buy? And I was going to pull up the charts. I was going to do all these things, but I think it's even much more simple than that. We have a situation where Salesforce is going to be coming up against earnings, right? So right now we've had major companies. We've had consumer companies that are in trouble, right?
Like
we had
your
Walmart.
Yeah, I was just going to say your Walmart.
Exactly.
Tires.
So
all
we
of them
had
are losing money.
Huge. So Walmart, Target, these big companies, these companies that are depending on the consumer bringing their wallet to the door, they were getting hammered, right? So if you think about it, Salesforce is a software that allows big companies, all kinds of different, whether it be tech, whether it be consumer, whether all these sorts of things, to manage their salespeople, their customers, all in one data-driven software as a service product. Okay?
Which is an amazing software, above its time and all that stuff.
Right. They're doing great product. And they're
normal
growing.
Times.
Right.
Growing. Amazing.
Right. The problem is that so we're 6 days out from earnings. So when we look at all of these other discretionary stocks and we see them getting hammered, we have to ask these questions right now. Why would this not get hammered? Is this stock not in line for the exact same thing? Even stocks like Snapchat, that app on your phone that you're addicted to and you send all your friends little stupid stuff all day long, right? Yeah. Like it started with teenagers and then everyone kind of jumped in on it.
Right.
Well, it fell 42% yesterday. 42%, cut in half.
Unbelievable.
Well, why? Well, they are anticipating that the user base, the people that are using it on a daily basis, are going to fall. They're going to stop spending money. Yes. Stop spending money. People aren't going to continue to advertise on your product. They demand ad revenue. Okay. So if you have a customer management software and you're having fewer and fewer customers, you're not going to have an increase in usage. You're going to have a decrease in usage.
Absolutely.
So a company that what we looked at today when I was, briefly kind of giving my opinion on it was Snowflake. Salesforce was the company in question. Snowflake is a competitor. Snowflake at their earnings today was down 12%.
Wow.
The after hours, it rallied about 1%, but was down 12 to 13%. Okay. Well, what can we do? We can imply that information on the stock that we're really interested in, right?
Right.
And we love Palantir, right? This is one of our long-term holdings.
Totally.
We can extrapolate even farther down the road that Palantir might end up if Snowflake has problems.
Yes.
Palantir might have problems.
Absolutely.
So what I'm looking at over the next 24 to 48 hours is the market today. We got word from the Fed that they are still expecting that inflation is going to get under control. They're going to be able to handle it, but they're still threatening to whack us if they have to. We're bad boys to get inflation under control.
Well, that's the whole thing. They have to keep you calm. They have to keep, if they came out and said,
controlling
the moment they come out and say the sky is falling, that's when shit hits the fan and they
I hate to say
have a choice. They'll have to
but that's what they've been doing.
But
they have been doing that.
If they can keep on like saying, no, you know what, it's pretty good, we're going to be all right. Yeah. Right. But we may need the hammer.
Soft landing.
Then it'll you'll start like the people that know, like you will start like pulling back a little bit. Right. And then you'll tell people, and those people who hear you, the profiteers out there, they'll pull back slowly.
Right.
And it won't be that plummet.
Well, this individual, I think, played it exactly right after our conversation.
Right.
They purchased their product in the morning. We had the conversation. They asked my advice, what they thought they should do on it. And before the end of day, they ended up selling at a $4 a share increase. So they're paying about $4.40 or $153, I think, approximately, just off the top of my head. They made $4 on it per share. That's depending on how many shares, and I don't know exact numbers, but it's a $500 or $600 touch if
Sure.
in a day, in a couple hours, right?
Yeah.
And that is what we call swing trading, right? You're able to get in, get out, and then at the end of the day, it was funny because we had this conversation and they were like, yeah, no, that was a smart thing. It started tapering off at the end of the day. I'm glad I got out. I will wait till earnings. And the reason we wait till earnings is that the CEO of the company is going to have an opportunity to say, this is what we're doing. This is where we see things. This is where we see problems, right?
Right.
Well, but you don't know how the market's going to react to that.
No,
but right now, everything is bloodbath. So why do you want to take the chance?
No, why would you?
Right.
Why would you? You don't need to. You just have to be ready to act. Have your money ready. Just like you said, like I've watched it many times with this guy. It's not something I enjoy. You guys all know that I rather talk about mental and physical
because he is
and soul, and because I am mental a little bit. But like other things, I talk about musicals. But he sat me down and we've watched like earnings of companies. We've watched like Jay Powell, and literally as he's talking, I have the market open in my little app on my phone, and I'm watching the reaction, and like he will literally say one phrase, boom, it drops. And then about 5 minutes later, he says something else that's positive,
right?
And it starts creeping upwards. And it is totally true. It's like there are people watching this stuff. There are that if you pay attention and you watch it, and you do the projections that Pat's been teaching you, like the up line and the down line, which are called
support and resistance. Yeah,
support and resistance. Yeah. If you do
up
that
line. He's lucky I do this all for him, right?
Hashtag up and down line.
Hashtag.
But if you follow that, like Pat's saying, and then you wait for earnings and you do the due diligence that he's teaching us, man, you're going to do well. Like this young Propheteer, she made money,
right?
Just by listening.
And that was something where we had a conversation earlier. This exact same person, we had a conversation earlier in the week, and she was talking about Tesla and that she had purchased a chunk of Tesla, and I said that was a mistake, and she's like, why? And I said, well, it's got a ton to drop, and this is the charting, and Tesla could really be a $500 stock in a very short period of time.
Right.
And they were comfortable to sit on that, and they were comfortable to watch that price action. They were comfortable at that 650, 670 range. They thought that was a deal. And I said that, sure. Yeah. As long as you're okay to know that $10,000 or $15,000 could go down 25, 35%.
Right.
And as long as you're comfortable with that, then now's the time to buy. If you can take in dollar cost average, DCA, you take and buy, then when it runs, you have all of this profit here and you're buying it. The problem is you have to be able to sleep at night.
That's right.
Right. If you keep losing money as you're buying on the way down, you can't sleep at night. You're no good to your family, your friends, your loved ones, nothing.
You're not spending your rent check. You're spending disposable income, which that's why we're in a recession, because not a lot of people have that disposable income. But if you're fortunate enough to have some disposable income, then now would be a good time to invest. It's just like the Palantir there. You told me when I bought it, was that a year and a half ago now when you started advising me?
Yep.
That, it's going to soar, but then it's going to drop, and it's going to drop hard. And hold on, you got 5 years. This is going to be a rodeo. Yep. Don't spend money you don't have.
Right.
Because it's not worth the gamble. You're going to lose it.
Yep.
And that's exactly what happened. I've lost a large portion of my money. Right. But I know it's going to pop.
But you haven't lost anything.
No.
Because you haven't sold it. So when you wrote it up,
that's right.
And it was at its peak, and we were saying that this is going to pull back.
Yeah.
To be honest with you, I don't think many people saw this painful a recession, recession.
You do.
I think like I knew a fair chunk ago that we were going to get hammered, but I didn't think that we would see these large caps get hit too. Like if you were to tell me that Walmart would be down 40%,
that is shocking that Walmart is hit. Like those are the staples of the stock world, like that you just don't expect to get hit. And you're absolutely right.
Like this is going to be bad. So that's where I'm saying is that if you can, the concept, the saying is to keep dry powder. And it goes back to the old adage of, when you had your gun and you were getting ready to shoot.
Yeah.
The concept is that you want to keep dry powder for when that rally comes. Yeah. And when these bull and a bull is a downward market, a
Yeah.
bull market versus a bear market. And we've talked briefly about that, but that goes back to an old Wall Street saying where the bear tackles down its prey, where a bull uses its horn and scoops up its prey, right? So that's where bear and bull markets come from.
Right.
So when you are in a bear market, the rallies on bear markets are wild because everyone's like, now, and then it fails and then it falls down lower.
Yeah.
But when everyone goes now, right, they rally,
Yeah.
rally, and then they flush. So if you can buy and catch these little movements, you can make a ton of money. Even
That's
like
right.
again, if you can make 4 or 5% on a daily move and get out of it.
Yeah. But
Huge.
I like to warn you right now. This is something that like Pat's experienced this. You have to watch it. Like if you want to get in on these quick moves, quick ins
100%.
and outs,
Yeah.
you cannot go to the grocery store.
Right.
You're watching the way this is bouncing. Like poor Pat here.
Oh, I've had up,
right.
I've had 50, 60, $70,000 days.
Yeah.
The biggest day I've ever had was an $85,000 day.
Yeah.
And, a great example was Craig, a buddy of ours from work.
Yeah.
He said to me, he's like, 85,000 is a lot of money in a day. And I'm like, yeah, but I think it's going to go over that 100 mark. And when I went home that night, again, I was dealing with my father who was very sick, and I ended up just getting away from it. I didn't set a profit take or a stop loss or anything like that. And I ended up losing about 25,000. Well,
just because you were distracted.
Because I wasn't at my phone.
Yeah. Yeah. Like you didn't actually lose it. That was all profit that you were losing, but it
100%
came off your table.
Right.
Yeah.
Yeah.
But so but you could have, had you not watched it all day because you were busy, you would have lost everything.
Right. Because an $85,000 day would have been. Oh, again, that's how these work.
Yeah.
They go up and they come down, and then they go up and then they come down. If you can get some of these wild movements, they're going to come back down. But all along here, if you can take profit, you're putting bread on your table, right?
So that's how Pat runs the market, because he has that time. He has that, his job is part of that. It's all wrapped up in that. Yep. Whereas I don't have that time. So we talk about those diamond hand stocks that he's always telling me about. And that's what I invest in. I invest when the diamond hand hits. Those kind of stocks are low. And, every time I invest is for my kids. I'm not investing so I can go buy a boat. I'm not investing so I could buy anything else. I know, a little dig. How's the gas prices? You want to fill up that boat today?
Yeah. Well, when we take it out on Saturday, you won't be too complaining.
Yeah.
So
we'll do some filming Saturday. See our adventures on Saturday. It's gonna be a lot of fun. And the golfing on Sunday will be great too. But the whole thing is
just living the dream.
We're just two different things, and you can make money both ways. Right. If for me, I am making money for my kids. I'm hoping my grandkids one time will have quite a bit of money. They can just sell some stocks, they can sell some of my properties or whatever they need. That's what I'm building right now. So the money that I invest is my income that I don't need. It's just that extra. I buy these diamond stocks that I don't have to watch at all. Like 5 years from now, I'll look at it and go, oh, you know what, I'm up $100 a share or something. And that's when maybe
I bought it at 12 and it's gone to 100 and it's taken 3 years to do it. And you go, oh, okay. Well, I didn't even look at it other than
do anything.
The odd glance, right?
Yeah.
So
whereas you're hourly. Like I've seen you do I've seen you do like a 2-hour trade. You bought it and then you sell it and you make quite a
really good story briefly, and then we'll wrap off of this. Again, we were talking about my father earlier, is that I was sitting in the hospital when he was having one of his cancer treatments, and we were in Toronto. And this was during the GME and AM. Well, it was GME.
What's GME?
GameStop.
Oh, yes.
It was the fiasco that happened with that.
Right.
And my dad's sitting in there, and he's cancer treatments, feeling awful. And I was saying to him that I had made a decent amount of money the day before on a deal, and he's like, well, put $500 for me. And I'm like, oh yeah, okay, cool. So we ended up in the span of about 40 minutes, we turned that $500 into $8,000. And right. Yeah. And we ended up, it was, we just talked about a little bit about faith and divinity and that sort of thing in the last podcast. Yeah. But we were sitting there, and I happened to set a profit take to sell because I figured it would pull back before the end of the day. And we're watching it. And he's like, I can't remember. I think it was about like $360 or $370 the stock was at. And I figured that he would go to like 420 and then he would start to pull back down. But I'm like, I'm going to put a 418 stock, like profit take on it, $418, because I want to be able to get out before all the other people at 420.
Just start selling, because if everyone starts selling, you might not get your sale in.
At 420, people are going to start to pull out.
Right.
So because it's just a round number.
Right.
So we were sitting there and we were running at the end of the day, and the market was ticking up and ticking up and ticking up. And I remember my dad sitting there and laying in bed, and he was so sick, so sick. And he said, "Don't worry about it. It'll get there." And I'm like, "Well, I know, but we're way up. I don't want it to like flush down on me in a minute." And he's like, "Don't worry about it. It'll get there."
Yeah.
And 1 minute before the end of the trading day, it hit that. And it hit $419.
Yeah.
And I got completely filled. If I had been at 420, I wouldn't have gotten anything. And it flushed down into the high threes.
Yeah.
Like probably would have lost money on the deal. Yeah. And I remember sitting there going like, that was the perfect trade. And my ass was tighter than a drum. Oh, yeah, and I remember him sitting there just like, don't worry about it.
No, it's fine.
You got it.
Yeah.
You got it.
It's great.
You got it. So
no,
it's that one is very few and far between, and it worked out perfectly. So,
and that's another thing that like, it's not quite what you're talking about, but the other thing is that because Pat and I use disposable income. So disposable meaning that we use our money to make money, but disposable meaning that I'm not going to lose my house. My kids aren't going to starve. I'll have clothes on my back. I got gas in my tank. So this money I can use for whatever I choose. So we don't sweat it so much when the market drops. But I'm telling you right now, man, if you're going to sweat this money, my dad used to say, he was a bit of a gambler. He played a lot of cards. My dad used to say, James, if you can't take that money and light it on fire and walk away feeling good about yourself, do not sit at the table, because you don't belong at that table. That's for your family. Don't use that. Yeah. And I never forgot that. And I feel the same way about the market. Don't do it. It's not worth it. He's saying all these, like he's made 80,000 and it's exciting. I get caught up in it sometimes too. Makes $1,000 in a day. He makes, but that's because he's knowledgeable. It's because he knows what he's doing. And that's taken years.
Right.
And he still, how often have you taken your daughter's college fund and bet it?
Not once.
Never. Right? How often have you decided, I'm not going to get groceries today because today I know this stock's going to go up?
Yeah, never once. No.
Never. You wouldn't.
The whole concept of it is, and I couldn't agree with you more. You also have on the same head of the coin, you have a diligence that you owe your family as well to invest in something. Whether you are throwing money on Doge and these crazy crypto projects that are out there, they are a 10 out of 10 risk. Okay.
Yes.
If you go out and you buy Apple and you trade Apple and you learn how to trade Apple, Apple is not going to fall apart on us to zero. Like it's not going bankrupt.
No.
Right. No. So what I'm saying is learn some of the techniques that I'm teaching you, apply it, because you owe it to your family.
Yeah.
You're not ending up in a situation where you're bankrupt. But on that point, I think that's enough for tonight. I think I'm going to run it. I'm going to run it a headset juice.
Speaking of girls, our children that need help, you got to do some homework. So. What are you working on tonight?
I think it's algebra tonight. We were
algebra. Awesome.
Yeah, triangles, and then now we're on to the algebra. So
perfect. I love algebra. One of my favorite things.
I'm really killing grade 7. Gonna do well.
Yeah, doing it again for the 4th time. I don't. I'm just kidding. Anyway, Propheteers. Oh, we've lost Pat. That's all right. I can do this without him. I'm better without him. You guys like me more anyway, and we all know it. So I hope you learned a little bit from Pat here, and I hope you enjoyed our little podcast and you got some good information. And just because Pat's not here to say it, let's make some money together. Thanks for coming. I'm James, and that frozen thing over there, that's Pat. I wonder if I can't. So have a wonderful day.
Hey folks, thanks again for joining us at Soaring Profits. Patrick and James, please like, subscribe, and share, and
follow us on YouTube, TikTok, Instagram, and of course Facebook. And let's start a dinner table discussion right on this page right here. Let's start talking about the topics that we're talking about today.
Thanks again, folks. Appreciate it.